I'm going to show you why I put Fibonacci levels in on longer term charts. Let's say you're a cable trader, pound versus the dollar. Let's say that you are a short-term trader like me and you're looking at cable daily chart. This was the Liz Truss debacle when the pound collapsed. Now, from that point, the market soared. And if you are a short-term trader and you're just looking at the daily chart, you can see a nice strong bull trend, consolidation patterns, flags and channels. So we've got a nice move to the upside. Now, let's say we're here and you're thinking, I want to keep buying because we're in a bull trend. When we got here, you might be thinking, oh, I want to buy at the 100-day moving average or buy at the 23.6% fib. The thing is, if I go back to the weekly chart, is the fact that when you look at the collapse going all the way back to 2007, around the time of the global financial crisis, this is just a correction in a bear trend. This whole move up that you thought was such an important bull trend on the daily chart is just a little correction to the first 23.6% fib on the weekly chart. And that also ties in quite nicely with the 200-week moving average. Yes, we did blip above it, but we only closed 1 week above it and then we came back down below it. If you were not aware of that, you would not understand why cable was turning around and collapsing. And you might think that you should be buying it all the way down when you probably shouldn't. That's just a quick lesson in why you have to look at longer term charts. Now, actually, when you look at the daily chart, we're at quite a key area now because I had put that second set of fibs on. Now, we are holding the 38.2% fib, as you can see. Quite a crucial point here. I think we probably will break down. If I remember correctly, there was a trend line which also reinforced the fact that we were going to reverse. Now, you wouldn't have known about this trend line because that goes back to 2014. So that is a 9-year trend line, which you wouldn't have spotted if you were not looking at the weekly chart, of course. And just as we approach that trend line, so somewhere between the 23.6% fib and that trend line is a 300 pip range. But 300 pips on a weekly chart is not much, is it? It's only margin of error. So the trend line and the fibs did catch the market. So that's why suddenly cable resumed its longer term bear trend. So the question now is, can we hold the 38.2% fib? I don't think we will. We're holding it temporarily, but I think eventually we'll break down purely because on the longer term chart, the pound versus the dollar does look like it is in a longer term bear trend. So I think eventually we will break below 2090 and we will collapse to 117.60 and probably even 114.50. That looks like we are where we are going. So that's why you need to look at longer term charts.